Oh boy, here we go again. Back to work, back to work. Boy, do we have a lot to talk about in what might be the most important video of the entire month of August. We have big changes on the 60-minute time frame, and we got some big news coming out tomorrow. I have two specific trades on my radar for tomorrow. By the time we're done this video tonight, you'll have an easy roadmap, an easy game plan to follow to make some money on CPI Wednesday. Before we jump in though, and to my favorite trades for tomorrow morning, make sure you subscribe to our channel. You don't want to miss tomorrow night's video, right? So make sure you subscribe. And as always, if you guys enjoy these videos, if you like these lessons, hit that like button, will ya? And give me a shout out, give me a hell yeah down in the comment section below. Thank you guys so much for tuning in, supporting our channel. Enough of the intro. Let's make some more money on what should be a fantastic day tomorrow in our trade room. Charts are all ready to go. As you can see here, Nasdaq triple Qs are all ready. Oh, the E-mini and the SPY is ready, of course. I have three very important clues on these charts in front of me that are telling us where the winning trades are waiting for us tomorrow morning. One of those clues is right here on the hourly time frame. And man, oh man, do those buyers, have they now taken control of the market's momentum? We've been talking about this for weeks now, right? Every time the buyers got price above this 21 EMA, they kept on getting whacked back down again. And sure enough now, buyers are finally starting to get some separation off that 21 EMA. This is a really big clue because now the buyers are potentially back in control of the medium to long-term trend. Now, you know what I'm going to say, right? Tomorrow is CPI Wednesday, so this may not last very long, right? But you can tell right now the buyers are now in control of that short-term momentum. That's one very big clue. But let's look at our schedule for tomorrow because, again, tomorrow is not your average Wednesday. Tomorrow, of course, is CPI Wednesday. We know that everybody is waiting to see, will this number keep trending lower and give the Fed some ammunition to start cutting rates in September, November? We're going to find out tomorrow morning, and we may see some very big reaction to that. We'll talk about how to trade that reaction in this video here this evening. But let's get back to our charts, though, because it's good to know when the news is, but the money is made on the charts. As I mentioned before, right, the buyers appear to be taking control now with some very much needed separation above that 21 EMA. But you know what? These hourly time frames are fantastic for the big picture, but they're not going to help us time the entry. So let's now drill down to some tick charts, some faster time frames. You see, tick charts make pattern recognition so much easier. This is a 10,000 tick chart, all the time frames in the upper left-hand corner. And this yellow line right there, that yellow line right there is the 21 EMA. It is pretty much the only indicator we use to find lots of winning trades each week in our trade room. I have two, I think, just as important clues on these tick charts right now. One big clue is this trading range and a breakout of that trading range. Anytime we see a range breakout, we always immediately think buy a breakout pullback. That is one very big clue on the tick charts. But the bigger clue right now is the sheer size of this move. We have yet to see any meaningful pullback. Whenever I see a big move like this in one direction, there's always two types of trades I look for the following day. One of those trades is very common, very consistent, and pretty easy to make money with. We'll start there first tonight, but I'll tell you, the second trade, we'll cover that a bit later on in this video. The second trade, I think, is potentially will make us even more money tomorrow. So if you like making money, I would definitely recommend watch all the way to the end of this video, and we'll cover both of those trades on my radar for tomorrow. First things first, let's cover the first one. The most common scenario whenever we see a big move higher like this is always going to be a two-legged pullback to let us buy low and a retest of the high. And after a big move like this, we oftentimes see what I call a double top reversal. Now, there's ways to make money on this during the pullback, on the way back to the high, and if we're lucky, that double top reversal off the high. Now, just talking about this is pretty simple to understand, right? But how do we time the entries on this? Because entry timing, we all know by now, is kind of the real secret to making money. Let's talk about that two-legged pullback. Now, when I say two-legged pullbacks, think about a measured move that goes a bit too far, right? A measured move, right? A 100% extension, a measured move that goes a bit too far. Ideally, I would love to get us down around that breakout pullback zone, as I mentioned before. Now, I have no idea how far that pullback will go because, again, tomorrow is CPI Wednesday, and this thing may get crushed and run back lower. If it does, I have a game plan for that. We'll cover that in just a few moments. But first things first, though, I don't want to pick a bottom on that, right? Because it may keep on going lower. What I'll do is I'm going to use what I call a failure pattern. I don't know how far the market will pull back. What I do know, though, is this is a horrible place to be a seller. Not with that big move up like this, right? Not with all that bullish momentum on the 6-minute time frame. So if I can see some bears coming in and try to sell once and twice, I'm going to use what I call a failure pattern. We teach, of course, in our free video classes. Once those bears are stuck short, now I can use their stop losses to run those stops and go back up to retest that high. That's my two-legged pullback, a bit more than a measured move. Think about a measured move that goes too far. Now, once I get that failure pattern and I can trap in those sellers, then we look for a very simple pattern called a bear trap pattern. Now, bear traps are very, very simple. The key is I want to see a higher high in price and a move right below that prior swing right there. Again, I call these failure patterns a two-try, trap the bears in, buy into those stop losses. Then as we go higher, look for that higher high in price, find that little swing between the lows and grab that bear trap pattern off that low. A failure into trap combination. Now think about this, very important. Anybody who buys during that pullback, where are we taking profit? Majority of us back up at that high. Now think about this. Buyers down here become sellers up here. We're already way, way high up the chart already, right? Probably not going to be a lot more buyers coming in at that high, except rookies. Inexperienced rookies who are trading headlines and not trading the chart in front of them. In this situation, watch closely. It's a crown reversal pattern. It's buyers trying once, lower low. Buyers trying twice. It's a bull trap off the high. I call these crown reversal patterns. What I need is, because I'm going against the overall momentum of the market, I need to trap in these buyers and use their stop losses to fuel that momentum turn back in the opposite direction. If I don't have momentum on my side, I have to wait for buyers to get trapped in, run their stops, and use those stops to fuel the move back down again. So this is the sequence. Anytime I see a big move in one direction, here's one of two patterns I'm looking for the following day. It's a two-legged pullback. Give me a chance to buy nice and low. If we're lucky, it'll be right around that breakout pullback zone. Again, I'm not picking a bottom. It's a failure pattern into a bear trap pattern into what is ultimately a bull trap pattern. I call these crown reversals. Now, if we're lucky, we'll wind up rolling all the way back down again. We'll take out that low, and guess who's waiting down here? More buyers, right? More buyers, and we can do it again. Wait for that 21 EMA to come over. Again, don't pick the bottom down here. That's a rookie mistake. Wait for those bears to come in. Let them try once. Let them try twice. This will usually be like this. It'll usually be a little bit further below that low. It'll kind of overshoot that low a little bit, right? That's even better because now that will trick all the rookies. They're thinking this thing now is reversing. It's probably not a reversal. Again, wait for that pullback to the 21 EMA. Get those bears coming in once and twice. Trap those bears in. And again, squeeze those stops. Run it up top. Higher high in price. I'm out of space over here, right? But same idea, right? Same idea. It's that failure in a bear trap combination. That failure, again, into that bear trap combo. Failure, I call these double bottom retest, right? Double bottom retest, that failure, again, into that bear trap combination. Man, this always gets me excited just talking about this stuff, but let's slow down for a second because I have a lot more I want to cover in this video. But if you're watching for the first time right now, this might be way over your head. This might be a brand new strategy for you. But don't you worry, I teach this entire roadmap. I have hundreds of examples of failures, traps, crown reversals, double bottoms, two-legged pullbacks. I cover so much more in a ton more detail in our free video classes. What I'll do for you is I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free video course, because the strategy I teach in that short video series will teach you a stupidly simple trick we use in our members trade room that tells us where the winning trades are waiting for us each day. Most importantly, I want to help you time better entries and start making money on your own. I'll teach you 4 my favorite entry patterns, failures, traps, pullback combinations. Everybody loves that free video course. Guys, the markets are way too good right now if you're not making consistent money. If you're serious about making money in these markets, hit that link that popped up there, take that free course, learn the roadmap, get your confidence back, and start making money on your own. Also, to be aware too, I'm going to put all the important links tonight in the description of this YouTube video. Put the free class links down there. Start there first. Learn the roadmap. I'll put our trade room membership links down there as well. We trade together every day, 8 o'clock Eastern time in our trade room. And also too, I post a lot of videos and charts and updates on Twitter or X throughout the day. If you're on Twitter X, give me a follow. Again, all the details, all the links you'll need in the description of that YouTube video. But again, that is the first scenario, right? Of one of 2 patterns, a deep two-legged pullback. Trap those bears in on the way back up. It's that technical bear trap. And again, once people take their profit, rope those rookies in, it's that crown reversal, back down again, and pick it up and rinse and repeat. Failure, trap pattern, back and forth as we go. Now, we have a really, really big news event tomorrow morning. Let's talk about some variations of that first sequence. For example, we may get a real strong run going lower. Like I mentioned earlier, the buyers have control right now on the 60-minute time frame, but they're walking up into that breakout pullback zone. Would anybody be surprised if tomorrow is a buy the rumor, sell the news, buy the rumor, sell the news? No, right? Nobody should be surprised if this thing just gets rocked and runs back lower. Here's one thing you want to keep in mind. If this thing really takes off the downside here, we have to remember that all of that bear momentum is going to want to pull back and retest that low before it makes that run higher. This is very, very important. There's a big difference between a two-legged pullback. That's a failure pattern right there. If this thing really rocks and runs lower, what I want you to do is start looking for traps. It's all about traps because, again, all that momentum will want to pull back, retest, and then make that move higher. So watch closely. It'll always be bears once, bears twice, and get in as low as you can. The key to this is, remember, always higher highs, right? Bears once, bears twice. Their stops are sitting right up there. I want to buy into those stops. The problem, though, is I don't want to buy as we're going higher because, again, if it races lower, it's going to want to pull back, retest, and then go back up. If I use a typical failure pattern here and I buy as we're going higher, I'm oftentimes walking right into a bull trap, run lower, and then go without me here. I don't want you to make that mistake tomorrow if we get that strong run lower. If it gets crushed and runs lower, it's all about finding, again, it's all about finding bear traps, right? Bear traps are very simple. It's keep on letting those bears try, get in as low as you possibly can. That way, if we do wind up going higher and getting crushed back down again, you're at least already getting your one-to-one, stop moves up to point of entry. You've at least got your risk off that trade, lock up some reward, and then if it does keep going, then great, right? But if it doesn't and it rolls over on you, you're not getting stopped out and losing money. All right, so that's one variation if it gets rocked as we're going lower. Let's cover now 2 more variations. I know a few more here real quick, and then we'll get the Nasdaq, and talk that second game plan for tomorrow, and I'll make it worth your while. It's worth it. Stick around all the way to the end. So, kind of third variation here right now would be, let's say now we get that strong run going lower, but now we don't get any 1, 2. We don't get that failure to buy nice and low. We may not get that. There might be so many buyers waiting down here. This thing may run lower and just boing right back up and make a run back up to retest the high. If that happens, these are very difficult on the emotions. It's helpful to have a game plan. If it V-bottoms off that low, I always begin to look for the market beginning to grind higher. The grinding higher is the giveaway, guys. Whenever we grind higher, watch closely. Draw a trend line off those highs, bring it now and pin it that big low, off that big low. Now, what do we always say? Look left, find some prior swings, and the goal here is to find a prior swing low that lines up with the low of that channel. I want the first test off the low of that channel. And oftentimes, it is going to be a bear trap pattern. Sometimes there is no swing right there. We get underneath the 21 moving average, underneath the 21 EMA. I can now use a failure pattern into a pullback combination, a failure pattern into a bear trap combination. All the same entry patterns you guys are learning, of course, in the free video course: traps, failures, pullback combos. The most important thing is that when I see this thing V-bottom off that low in this overall bull market right now, it's tough on the emotions. So don't chase after it. Right when that voice in your head says, come on, man, get in, you're missing it, that is exactly when you know, get ready for the pullback, right? So draw the trend line off the top, off the low, and don't miss the first test is the best test off of that low. And again, we're trying to go back up and retest the high. Same idea, right? 1, 2, crown reversal, and that short back down again. One more variation, I promise, then we'll go forward here. If we get a very strong run down, I mentioned earlier that we're going to probably try to pull back and retest that low, right? So again, if we get a real strong run down here, we might get our 1 try, 2 try. We might get our bear trap off that low. But again, because the strength of that move going lower, we'll want to come back and retest that low again. If we can get our 1-to-1, right, take our profit, get rid of the risk, and it rolls over anyways and retest that low, remember, in an overall bull market, a double bottom is a gift to the buyers, because now anybody who sells during that pullback, where's their profit targets? They're buying their profit targets back at that low. So sellers here become buyers right here. Now things get better, right? Because now, as that 21 EMA comes over, if I can trap the rookie bears coming in and try it a couple times now think about this. Everyone becomes a buyer in this situation. Why do I say that? Because the bears who sold right here, right, they become buyers, buying their way out, right, covering their short position at that low. The short sellers here are buyers down here. Then if I can rope in some of these rookie sellers, again, this is a horrible place to be selling. If you want to sell high. Don't sell low down here. We know these are rookies because only rookies will make mistakes like that. Let those bears try twice. Again, we're not going to pick a bottom on that, right? We're not going to blindly buy at that low. Time the better entry, let them try twice, squeeze those stops. In this situation, the sellers who are selling here, they're buying when they get stopped out. Everyone becomes a buyer in this type of entry pattern in a double bottom retest. Again, the key here is in an overall bull market. And again, that double bottom will oftentimes spring higher here, and you can go out and find that bear trap. These, I'll tell you, these double bottoms like this, double bottoms in a bull market are oftentimes my biggest winning trades each week in our trade room. Again, it'll always be a bear trap, trying to go back in as we go back up to retest that high. So again, some variations of this, but you know, my job right now is I want to make sure you are ready and bulletproof no matter what these wild markets throw at us here for tomorrow. But at least now you know, right? The most important thing is that two-legged pullback, that retest of the high, and that double top short off the top. We gave you guys some variations off the low, how to buy it on the way back up, and of course the creme reversal pattern off of that high. Now let's talk about that second scenario over on the Nasdaq, because if we're lucky tomorrow, that really is the more lucrative trade I look for in these types of situations. I mentioned before too on the S&P, same thing here on the Nasdaq. Been talking about this for weeks now, right? Every time these buyers had any chance of holding a pullback off that 21 EMA, they kept getting crushed, right? Even earlier on in the month of August, it didn't look good for those buyers. Well, now we're starting to get some separation off that 21 EMA. Now we're starting to get that jump away from the 21 EMA, and that in my eyes is always a sign the trend now has shifted. Now again, I might be eating those words, right, 24 hours from now, because we got CPI tomorrow. We'll see if these buyers can hold this area, because like I said before, is this a slow walk into a bull trap right now? Is this a buy the rumor, sell the news event for tomorrow? We're going to find out tomorrow morning at 8:30 Eastern time, aren't we? Back to our tick charts though. 4,000 tick chart. Look at the size of that move. It must be August, right? It must be August, because only the month of August would a market just grind up like this for literally almost a week straight. Volume is low in August. That allows markets to behave like that. There's that trading range again. And again, one big clue, anytime we see a range breakout, I automatically think, where's my breakout pullback? Right? One thing we love about ranges is that ranges love to break out pullback. And again, because of the size of that move right now, I would love to get a two-legged pullback, get down to that trading range, and right back up and retest the high. So the exact same game plan we talked about on the S&P can pretty much be copy and pasted over on this Nasdaq. Now let's talk about if we go sideways, because one very common scenario after a big move in one direction like this is the following day turns sideways. And if we're lucky, that's exactly what will happen. Now, ranges. There's two things about ranges you need to learn, and we go into a lot more detail of this in that free video course. Again, all the links you'll need to learn more about this stuff in the description of the YouTube video. But ranges. The most important thing about ranges is two things. One is that ranges act like magnets, and they love to rotate, right? They love to rotate. So if we go sideways here tomorrow, the key will now be look left and find areas of support underneath the trading range. Now, in the free video course, we talk about using things like expanding triangles and pendulum swings. So again, a lot more details are covered in that free video class. Description, again, has all the links that you'll need. But the trick here is, once you find that range now becomes your magnet, okay? There are two things I want to look for in a range scenario. First things first, find prior swings. Find swing, basically prior swing highs, prior swing lows, and use those as key areas of support. Then wait for a pullback. Now, during that pullback, I have no idea how deep that pullback will go. I'm not going to waste your time and say we'll use Fibonacci or momentum or divergence. None of it's very reliable, right? I have no idea how far that pullback will go. Maybe it goes here. Maybe it goes here. I don't know. All I know is that range above us is a magnet. So once they pull back now, this is why the 21 EMA is so valuable, at least to me. I don't need to pick that bottom. I know for sure. I know this is a horrible place to be selling. Not with a big bull market like this, not with a range overhead, not with a big support below that, right? I don't know how far the pullback will be, but I do know I do not want to sell that pullback. So let those bears come in. Let them dig their own grave, right? Literally let those rookies wrap that noose around their neck, because then we got you, right? Now you can't leave. Now you're trapped. I can run your stops. Now, I may not get the bottom on that, right? I may not get the very bottom of that move, but I'll get this big chunk. And I'll tell you, you can make a fortune getting a small chunk out of these moves a few times a day. We don't have to pick the exact tops and bottoms in this, get that big chunk of it. Remember, it's the same thing, right? It's a failure pattern into that same bear trap combination. Now, here is why I said earlier, these are my favorite. These are oftentimes a lot more lucrative, because how do ranges work? Ranges are magnets, like to rotate. Rotation is key. The amount below the range now gets projected now above the range, right? These are supposed to be symmetrical, by the way, right? So we now know this is now, and again, this, I know it's not drawn perfectly, right? But these will be symmetrical, right? The amount below, right? The amount now above. That is now where the market wants to go. So what I always do is take half off at the high of that range. There will usually be some trend line over here, right? Take a quarter off right there, right? Quarter off right there, and leave that final quarter up for the runner up around that pendulum swing. This is why I said earlier that ranges are easier because, first of all, once we find the range, we know where the magnet is, and they can be a lot more lucrative because when they rotate, boy, do they get going, and they can rotate really strong and snap back in the opposite direction. That's one thing to keep an eye on with the range here. And also to keep in mind too, right? That same idea of that double bottom and do it again, right? That same game plan works. That V bottom, right? The V bottom and the grind going higher. All of those variations I mentioned earlier on the S&P, those also work in this situation as well, right? Unfortunately, I can't go over everything here on these YouTube videos, but the idea is very simple. Get that deep pullback, trap in those bears, fill your pattern, right? Bear trap pattern again. It could double bottom and then back up again. It may give us that V bottom, the same basic idea. Now, let's go one more step up the ladder here. This is where things get fun. A little more advanced now. Again, second scenario here for the range for tomorrow. We go subs in the range now. Be very careful if we go higher first. If we go higher first, this is where a head fake or a fake out breakout comes into play here. The amount above the range is the amount below the range. After a big move higher like this, this is not the place to be buying. We might get a big breakout pullback, and if that happens, we'll cover that tomorrow morning in our trade room. But usually, after a really big move up like this, if it goes sideways in a range like this, this is not a good spot to buy a breakout because you're buying way high up. I want to buy low. Where the magic happens right now is this is where one of those crown reversal patterns come in, right? Basically a bull trap. It's a lower low in price, a trap above that high, a crown reversal. And remember, now we know the amount above, the amount below. Now we know where this thing wants to go down here. Now we know if we're lucky enough to get that bull trap short off the high, that crown reversal, we now know profit comes off at the low of that range and the final target off at that pendulum swing. Now, once we're down here, again, this could keep going, right? It may overshoot that low, and honestly, we hope it will. Hopefully it will, because if it overshoots that low, all that does is give more rookie traders the reason to short this thing on the pullback. This is likely nothing more than one big bear trap. It's a big move up into that range. The range is the magnet, and you're pulling back to support levels below a range magnet. No. There's no way I'm selling down there. I'll wait for other rookies to come in once, twice. These are some of the easiest trades in the world. A failure into that trap combination. Once you learn structure, once you learn ranges and big moves like this, it's a matter of simply rinse and repeat. Failure, bear trap, failure, bear trap, over and over again. So keep that range rotation on your radar. I don't want to get any emails today saying I bought the breakout. Do not fall for that trap up there. Sell into that bull trap at the top there. Grab that profit target, and again, trap the bears in, failures, trap combinations, and roll that sucker back up. Pendulum. You will soon love ranges once you guys go through our free video classes because they are one of the easiest ways to make money. All right, guys, the game plan is set for tomorrow. Now, don't forget, tomorrow morning, 8 o'clock Eastern time. Do not be late tomorrow morning because we've got some fireworks scheduled at 8:30 Eastern time. All kidding aside, though, guys, tomorrow morning, the easiest way to start making money in these markets is to learn and trade along every morning in our trade room. As always, all the links you need, description of the YouTube video, video. Start first with the free classes, learn the roadmap, start making money on your own. Any questions, any issues getting started, call the office, use live chat. I'm here to help if you guys need help along the way. All right, guys, that's it for tonight. Hope you learned a bunch. Hope you use this knowledge to earn a bunch tomorrow. And hopefully I'll see you sometime soon trading with us in the morning room as a brand new member. In the meantime, be well, be nice to each other out there, will ya? And you better be here next time. Adios, amigos. Bye for now.